Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York, on Wednesday, the 18th day of June, 2014, and this is the daily report for gold and silver. We do have the precious metals complex trading moderately higher and across the board. First to gold, we're currently trading up approximately $3 on the day. $12.74 and change on the screen. The low $65.60, the high $12.76.60. Silver also showing a nice gain on the day, up approximately 9 cents. We are trading at $19.83 and change with a high of 96 and a low of 19.59. More on silver towards the end of the show. Interesting day in the precious metals markets. We have the Fed, which has met yesterday as well as today. News reports out are hinting at the possibility of speeding up the tapering process and also speeding up the rate in which we increase our interest rates. We'll have to see how that all pans out. But we do have moderately higher pricing in the precious metals markets as well as the equities markets. But here's what I'm looking at more than anything else. We talked yesterday about the possibility of a pattern called a tri-star top. It's basically these three stars. We've had absolutely no follow through. You would have seen a red candle with at least a lower low than this middle candle. We've got quite a low here. But what we are getting is another day in which we've got a small-bodied candle. So to me, as this market kind of filters out the news, what we're looking at is really something similar, or akin to, I should say, to what we saw back in May, just before the end of May, when we saw the market kind of fall out of bed and hit these new lows at about 1240 right in here. What we're seeing really is a return almost to a sideways market, except that we've got a pretty dynamic range in this market. And I really think that we are caught within a market in between our resistance sitting at around 1286 and our support sitting at around 1262. My sense on this market is that it is probably forming some sort of a base. I would like to see the market move higher, but we won't really get any kind of real confirmation unless we see it go and basically threaten and take out this upper level resistance. And right now we have been unable to do that. We've had one day in which we had the high come close to it. Of course, that's when we first exited our long positions. The market since has stabilized. You can see this extreme low here. Call it, if this is about 1260, so maybe 1259, 1258. I'd have to look at the numbers on the board, but right around that area. But you can see that the open and closes, that's these real bodies, have been generally pretty tight. Traders are trying to kind of move a range so they can trade with it, but nonetheless, we have had an open and close that has been fairly consistent. And even with this higher day, I'm not convinced right now 100% that the market wants to trend higher. Although my sense is that we might see something, but we won't really know unless we begin to at least start to take out this area at around 1280 and effectively trade back into this zone right here. Japanese average charts are also giving us some mixed signals today. I've just converted the daily chart that we were looking at into a daily Japanese average. We noted that what was unique in this particular market yesterday was we did go to a red candle, and that's because it traded and closed below the midpoint of the prior day. And right now, with this slightly up day and the fact where the midpoint rests, we have the market in essence going back to green, but with a very, very small body candle. So that's not indicative of a key reversal. What we might be looking at right now is the market trading, hitting its high, moving sideways, and then spurting back up again. That would be a macro to the microcosm that we noticed doing the same thing. We'll have to see how that unfolds. We'll have to see how the market reacts as all of the minutes are released from the Fed statement, and most importantly, analyzed and digested. Now, we're currently looking at our 2-day chart, standard candlestick format, and I do have a simple moving average in here. It's a 14 cycle, so it would be 28 days because I've got 2-day candles here. We're getting a very, very similar read in the market in that we went from red to green over the last 2 candles. First. Secondly, very, very small bodied candles. So if what we're going to look at is the market in essence finding a bottom at 1240 after coming down, moving back up, trading sideways, and then moving back up again, that we can determine if in fact it begins to start to trade above these certain areas at around 1280 to 1286. I'm still holding resistance at about 1286. Now, when we convert our 2-day Japanese average chart, what we are getting is still green. We've had green all across the board in this, trading at 74.80 currently. But if you notice, the body size is still absolutely small. We do have upper and a very, very small lower tail, but the tail is a little bit smaller than the previous candle, but it's the body size that tells us that this uptrend, according to a 2-day chart, which has been intact, is waning. But most importantly, when we look at our basic simple moving average, we're pretty much right at that point. So because it is in essence a 30-day moving average, in other words, a 2-day chart that we've got a 14 cycle on, a move above this moving average would also signal or be relatively bullish on a technical basis. Now, when we look at our weekly chart, interestingly enough, of course, this is only Wednesday, so the market will continue to grow this last candle. But on the longer term charts, we had this 3-river morning star, very similar to the 3-river morning star we got on the dailies. However, in terms of straight candlestick pattern identification, we have not achieved any kind of confirmation. To get a confirmation on this type of a pattern, what we would need to see, of course, is this current candle right in here, which is currently a doji in red, really taking off and going green. It would look something like this. It's for illustration purposes only, obviously. And it would have to be a green candle that had hopefully a higher high and a higher low. That would signal, of course, on a longer term basis, just as we got here on a longer term basis, some sort of a trend not only developing but continuing. And if that was the case, we would certainly want to re-enter from the long side. But as I said, I really wanted to wait for the FOMC meeting to conclude, let it become digested, see how the market reacts to it, because I still think that there are extremely bullish factors in the market. Geopolitical uncertainty in Iraq, that is heating up. It is certainly not leveling off. And the question is, will there be something large that transpires over the next week, week and a half, if the United States gets involved, if there is any kind of military action, whether it's drones or planes? But we can say this, and that is that the market has not corrected, it has simply leveled off. And that's really been indicative of what we have seen in the marketplace in recent events. And then lastly, silver, the little white metal that could. There's no doubt, as gold went sideways, silver continues to kind of spurt up. When we look at, this is a daily chart, of course, a 14-day moving average. It's maintained well above that, unlike gold, which broke back below at some point. And so we see this market, even though these body sizes are relatively small over the last 3 days, it continues to eke higher in the marketplace. But most impressively, if we look at really some of the tops in this market, we have identified our basic resistance at around, starting at around 1980, moving up to about $20 per ounce. We have seen this market really not threat, meaning move above and then come back below, but has been slowly meandering towards this resistance area. I'll be quite interested to see if it continues higher, how the market reacts once it hits this, I believe, solid resistance, of course, on a technical basis. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.